Well, in this video, let me tell you the story of Rupee. Rupee is the Indian currency, but what is the current story of Rupee? The value of Rupee is sliding. It is sliding so fast. It is at a historically low level of rupees 80 per dollar. So what is ahead, future ahead? How the future looks like? Well, there has been an historic decline of Rupee, and this historic decline will continue further. The noted business analyst firm Nomura estimates the Rupee to decline to rupees 82 per dollar. Well, the International Monetary Fund speculates that the value of Rupee may be around rupees 94 per dollar by 2029. So the prediction is certainly not encouraging, it's rather alarming. Well, then the next question comes. Is it the first time that the Rupee is losing its value? So it's not the first time. In fact, in the past too, the Rupee has lost its value in a very significant manner, in a very substantial manner. Well, let me quote you two examples. In 2000, during the 2008 global financial crisis, the value of the Rupee has eroded by 20%. During the Taper Tantrum of 2013, the value of Rupee has eroded by 11%. Taper Tantrum refers to withdrawal of the easy money policy adopted by the United States and other developed countries. Well, after the global financial crisis, US was printing dollars and infusing the currency into the global economy. This is called quantitative easing or easy money policy. So this unconventional monetary policy has increased liquidity in the global economy, resulting in more supply of dollars. Therefore, the value of the value of dollar has declined, but by 2013, the US central bank started withdrawing this policy of easy money. Therefore, it was reducing the supply of dollars, resulting in depreciation of the value of the Rupee. So, obviously, how is the value of Rupee calculated? Well, it is the foreign exchange market that decides. So, the demand and supply for dollars, the demand and supply for Rupee determines the Rupee dollar exchange value. So therefore, it is not for the first time that the value of Rupee is declining. It has declined in the past, and the historical trend is that the Rupee is declining. Let me also tell you the difference between devaluation and depreciation. So devaluation is a deliberate reduction in the value of the currency in the foreign exchange market by the respective nation. Why will a government deliberately devalue its own currency? Well, it does for several reasons, especially to boost its exports. When the value of the domestic currency reduces, then the exports become cheaper and competitive. Well, countries like China has resorted to competitive currency devaluation to capture the global markets. Well, this is called the policy of devaluation. Well, the depreciation it refers to the fall in the value of Rupee due to the market conditions of demand and supply. Today, India is not officially manipulating the value of Rupee. It is the market, free market, that is impacting on the value of Rupee. So, the demand and supply of dollars is now determining the value of Rupee. So, then the question comes, is the dollar more costlier only when comparison to Indian currency, or what is the global trend? Well, we find two trends here. Well, the value of Rupee in comparison to dollar is declining, but in comparison to certain other currencies of certain other countries is in fact increasing also. So the Rupee is not always depreciating. Rupee is depreciating with reference to dollar, but Rupee is appreciating with reference to some other countries. But this cannot be a solace for a simple reason that most of the global trade is conducted in dollars, and the share of dollar in India's external trade is increasing rapidly. So therefore, even if the Rupee appreciates with reference to other country currencies, it doesn't really bring much greater solace, especially when the value of the Rupee in comparison to dollar is eroding or is declining. Then the question comes is not just the rupee. In fact, currencies of several nations, including the currencies like euro, pound, and many other nations like Chile, Philippines, all these countries' currencies are also depreciating when compared to dollar. In fact, rupee is relatively less depreciating compared to other currencies. Well, the government often raises this question to claim that there's no room for concern and it's not just the Indian rupee that is depreciating. Well, the currencies of several other countries are depreciating. Why do you blame us? This is the argument of the government. But it is not necessary that the Indian economy should be impacted adversely by the adverse economic conditions in the world. There are instances where Indian economy could successfully insulate from the global headwinds. For example, let me quote you two examples. During the global financial crisis, the Lehman Brothers and several other American banks, insurance firms, and financial institutions have collapsed. Not only in the United States, this meltdown, fiscal meltdown, has occurred even in Europe. But Indian economy could largely be insulated from this global financial crisis. I'm not telling that the global financial crisis had no impact on India. It certainly impacted India too, but the impact is relatively much less. Look at the Indian economy grew by over 9% in 2007-8. In the year of global financial crisis in 2008-9, Indian economy grew by 6 to 7%. But in the subsequent years, it could immediately recover to register over 8% growth rate. Similarly, during the Asian economic crisis of late 90s, economies of nations like South Korea were impacted adversely, but Indian economy could withstand this Southeast Asian economic crisis. So therefore, to argue that Indian rupee erosion in the value of rupee is obvious and is not a problem to worry when other currencies are also depreciating doesn't really hold water. Then comes the question, what are the reasons that are dragging rupee down? Well, there are several international and domestic reasons for that. Let me now talk about the global reasons. Firstly, as I told you earlier, the value of rupee is determined by the demand and supply factors. So what is the demand for dollars? When the demand for dollars increase, automatically the value of rupee declines. How is the demand for value of rupee increasing? One, so in a periods of geopolitical and geoeconomic crisis, obviously there is a demand for dollar because dollar is defended by the most powerful nation on the earth, United States. So when there is a geopolitical and geoeconomic crisis, the surplus of nations and surplus of the rich obviously tend to move towards the safer havens like dollar. So today the COVID uncertainties and superimposed by the Russian war on Ukraine has created enough geopolitical and geoeconomic conditions that make dollar attractive. This is point one. Then the point two, the US Federal Reserve, in a bid to tame hyperinflation, is resorting to the interest hikes. So a hike in the interest rates. Well, there is a hyperinflation situation in the United States. US economy is witnessing a 40-year high inflation. So in a bid to tame inflation, the US Federal Reserve, which means is like our Reserve Bank of India, is resorting to interest rate hikes. Not just the United States, even the central banks of other developed nations are also resorting to the interest rate hikes. So obviously when dollar denominated assets could yield better returns due to higher rate of interest, the dollars flow from emerging economies into the United States. This is precisely what is happening today. There is a massive outflow of foreign portfolio investment from the Indian stock markets. Well, if you look at the FPI outflow in this calendar year, which means since January 2022, nearly $30 billion of foreign portfolio investments have pulled out of Indian stock markets. Well, this resulted in a massive pressure on rupee. Rupee value has eroded by around 7% since the beginning of the year. So therefore, the FPI outflow, in fact, we had witnessed 3 successive years of net FPI inflow, which means that the more foreign investment was coming into the Indian stock market than what was going. But today we are witnessing a net outflow of foreign portfolio investment to the tune of $30 billion in these 7 months itself. So this is resulting in a massive pressure on the Indian rupee. So this is the second international factor which is resulting in the pullout of foreign investment from the Indian stock markets. Then the third aspect is, well, Indian exports are increasing. Well, which is a good news certainly, because we can earn more dollars. But India's import bill is rising like anything. This is not just because of oil imports. Well, oil imports is a very important component of that, because India is highly import dependent in crudes, in energy sector. 80% of our crude oil requirements are met by imports, and 1/3 of India's import bill is essentially to pay for the oil, and the global oil prices are on the rise, especially since after the Ukraine war. Well, as a result of that, India's import bill is increasing. But not just the oil alone. Thanks to the Russian war on Ukraine, the edible oil prices are also increasing, and India is a very big importer of edible oils and pulses. So as a result of the rise in the global commodity prices, India's import bill is increasing like anything. In fact, India's coal imports have also increased like anything. So all this resulted in a very widening trade deficit. India is passing through a period of record trade deficit. During the April-June part of this financial year, India has reported a massive $25 billion trade deficit. So the widening trade deficit is resulting in the widening of the current account deficit. Current account deficit refers to the gap between the foreign exchange a country earns and spends. So look at the current account deficit. The current account deficit, which is popularly called as a CAD, was 1.2% of GDP in 21-22, which has now increased to over 3% of GDP. In this financial is expected to be around 3 to 3.3%. Well, this is a 10-year high. So higher current account deficit due to the higher import bill, the crude oil, the edible oils, the coal, gold imports, etc., are resulting in the widening trade deficit, resulting in the widening current account deficit. Well, this is yet another reason for Indian rupee to erode a value substantially. Then the question comes is, well, what the government is doing to prevent this? Well, government has taken certain measures. For example, it has imposed higher import duty on gold in a bid to curb gold imports, because India is the second largest consumer of gold. Gold is not produced in India. So whatever gold we buy is essentially imported gold or recycled gold. So to curb gold imports, government of India has imposed higher import duty on gold. But this is unlikely to deter the demand for gold, because the demand for gold is not just dependent on the price of the gold. It is dependent on the uncertainties in the economy. When the economy is uncertain, people try to invest in gold because gold is considered to be a safe haven. Then obviously the coal imports is a big factor, and the coal imports are increasing. Recently the government of India has imposed restrictions on state governments to mandatorily use at least a portion of its coal consumption should be met by imports. Well, this is the reason why the coal production is not picking up in India. Well, the public sector coal production is deliberately discouraged, and the private sector coal production has not picked up. So as a result, there is a yawning gap between the demand and supply of coal. We are compelled to depend on the imported coal, which is quite costly. Therefore, higher import duty on gold is unlikely to reduce the demand for gold in India. Then question comes, well, the Reserve Bank of India has introduced rupee trading, external trade in rupees, where you can finance exports and imports by rupees. But in a global trade dominated by dollar, this is unlikely to have a very big impact, except in relation to the countries like Russia, Iran and Sri Lanka, because Russia is facing a serious Western sanctions and therefore the Russia is unable to transact business in dollars. Well, it may show interest to trade in rupees. Similarly, Sri Lanka is starved of dollars. Well, it may trade in rupees. Iran also faces sanctions. It may trade in rupees. But barring these three nations, the other countries of the world may not show much interest to trade in rupees. Well, still it's a measure that will affect to ease the pressure on rupee, but it is unlikely to create a very big impact. Well, the other measures of the RBI and government include flexibility to the banks to provide, to offer higher interest rate for the foreign currency deposits, etc., etc. But how much will this really have? Well, the other argument of the government is we have a comfortable foreign exchange reserves. But these comfortable foreign exchange reserves were actually built to facilitate intervention to prevent the free fall of rupee. It is true that India has comfortable foreign exchange reserves. Well, India used to have $642 billion of foreign exchange reserves in last September. But subsequently, it has come down and now stand at $572 billion. This is precisely one of the reasons, one of the very important reason for this is RBI was selling off dollars from its reserves to prevent further fall in the value of rupee. Well, this is certainly a comfortable foreign exchange reserves. It is sufficient to meet the 10-month import bill. Well, notwithstanding the fact that that India has comfortable foreign exchange reserves, there are certain inherent vulnerabilities like high short-term debt. Short-term debt is to the tune of $267 billion, which has to be repaid in next 9 months. Well, these foreign exchange reserves are built, playing a very big role. So therefore, these vulnerabilities are certainly a matter of concern. So there is a mounting trade deficit, mounting current account deficit, coupled with the global adverse factors, and Indian economy has not yet fully recovered. India is passing through a high rate of inflation, the high unemployment rates. Well, these macroeconomic parameters are not so positive to give strength to the rupee. Therefore, the government needs to act to prevent the further fall of rupee value.